Hello guys. Hello guys, and welcome to this quick 5 minutes analysis of this week's trade. I'm going to be dropping more frequent videos concerning V75 as it's going. First of all, we need to determine the range of V75 from January till date, and that will help us determine the direction it's going till December. So here is what we are doing. I'm going to put it on an 8-hour time frame so that we can quickly see the range. Right, here we go. Notice this is from January right here, but since May 2023, no, April 2023 right here, since April 2023, yes, up till the last trade I took right here, everything, it's been in a range. Okay, so we have determined the range. The range is the highest point of trade it's right here, and that is highest point of trade since April is 437303, and the lowest point of trade since April is 3297505. Okay, since we've got that, we can mark our several points there that is our range. It is important to calculate your range because that will help you with your take profits and your stop losses and your calculation. So let's quickly go. Let's take it to 5 minutes. Now we are in 5 minutes. If you notice that our trade, it sold from 411565 and it sold into the range zone. Okay, notice the zone where this range is. Notice it. Now, when it got to that range, the market started consolidating. So here is the consolidation that we have right here. The consolidation is right here. The market started consolidating right here. Now, how do we now take our trade from this consolidation point? Right. You should notice. That's another thing here. Let's go. Here we'll go. Now we must mark several points. One of them is the point here. We'll mark this points here. This is a perfect entry point. Here is another perfect entry point because they are perfect break of structure points. There is a third one here, perfect break of structure points. So we've identified 1, 2, 3, 4, and most of those points we identified them on 5 minutes for a break of structure. All right. Now, most people might want to use a straight line to monitor these points. So here you go. There is one straight line here. There is another straight line here. Now, there is another method to get into this trade. It's called using fair gap value. All right, I'm going to treat that on another video. But now we're going to use this method of using the lowest points in the trade, especially for 5 minutes entry. Those with, especially those that have small accounts, we're going to use that. So let's quickly go in. Quickly. We've marked this point here. No, there is no trade taken. Mark the second point, no trade taken. All you have to do is wait and watch the market go. Mark the third point, no trade taken. Then the fourth point, you now put in your trade. You put a buy stop. So you put buy stop here, buy stop here, buy stop here, buy stop here. All right, guys, if you notice, I'm going to zoom into the trade. Notice there is really no drawback, right? Notice. This is the first one. Notice it goes, here is the little drawback that you will experience. So if you have a small account, the account can survive and you take your first trade. Here is the second drawback. There's nearly no drawback here. Here is the third entry. Here is the drawback. It's not a really big drawback. Here is the third. Here is the fourth one. The fourth one has a very small drawback, right? And then the fifth one here, which is the major BOS, the break of structure. All right, so guys, if you want to ensure that you grow small accounts, here are some of the entries you must take into consideration while you are going on with your trade. In our next videos, I will be explaining several concepts, like concepts that you must grab, like if you notice here, I wrote waiting for change of character. When the market was falling, we need to wait. Remember, the market is falling drastically, and here is it. But now notice, I had to wait for this first change of character, the change of character of the candles. Instead of going down, it broke it. So many people make the mistake by trading this. You don't trade this. This is the first change of character. That's why I wrote here waiting for change of character. That is one. Then I wait for the second change of character, which is two. Sometimes this change of character will do a double bottom and go ahead, but sometimes it doesn't do a double bottom. It does a second change of character. You wait for the third change of character. Now look at the first sign that the market is heading up. There is a consolidation here. The market consolidates, and create a spring. I call this a spring right here. The moment this spring is created, here you go. The spring here, the moment it is created, one of the characteristics of the spring is one of Wyckoff's strategy is that the spring is created below a manipulative zone. So this is a manipulative zone. You can notice that there are consolidations here, sideways consolidation. Notice here, there's a sideways consolidation. So if you can grasp this is, if you can play this video over and over again, grasp this and ask a few questions, you'll be able to get. So this concept is a combination of several concepts: ICT, Wyckoff. You get it. So you'll be able to understand this. Okay, wait for the change of character 1. Sometimes it does change of character 2. Here is change of character 1, change of character 2, and change of character 3. In the midst of change of character 3, there is a consolidation. When you see that consolidation and it's within the zone of the range that you have marked, that is a high probability trade. So when they say high probability trade, this is how you confirm high probability trades. Here is how you confirm high probability trades. And like what I showed you the other time, you rule the lowest points so that you have the most minimum drawbacks, so that you can grow small accounts, especially for those that are planning to grow small accounts into December. Here is what you've got to do. So in my videos, I'm going to be speaking about change of character in details, break of structure in details, liquidity, buy and sell liquidity in details, fair gap value in details as it relates to volatility indices, liquidity grab in details, especially when you are selling. Liquidity grabs, you don't find a lot of liquidity grabs when you are buying. For example, if this was selling now, it would have been a liquidity grab right here. But see, notice it didn't hold much. You understand? Because this is a buy liquidity. If you're selling, if it was a sell liquidity, it would have grabbed it. But you see, it's a buy liquidity. So what he was just doing was to pull through a break of structure right here. You just broke the structure right here and bam, heading upwards, which had a minimum pullback right here. There's a minimal pullback. Okay, guys. So then we'll also be speaking about horizontal consolidation, which is some of the things I spoke about here, but I'll be speaking about them in detail. So guys, this is a 5 minutes breakdown analysis. Now if you notice, I have a 200 moving average right here. This 200 moving average right here is not for trade. It's just to confirm the direction that the market is heading to. We don't use moving averages for trading. Notice the moving average here is just to confirm that the market is one of my confirmations right here. I use for several things to confirm, and one of them is the moving average. I don't use moving average to trade. I use price action to trade. But now you need it. You need the 200 moving average so that it will show you that the market is still selling or the market has started buying. Like right now, here is my confirmation that the market is buying. Okay, guys. So thank you for learning this. I will encourage you, as you watch my video, please click on the subscribe page, and God bless you. Thank you.